Now before moving forward, I want to show you one thing, that is we have these two expenses also that we need to create entry for. That is, one is capital expense on the building and one is revenue expense on the Atlas 5 vehicle. What it says right here is paid rupees 20,000 cash to add storage shed in the corner of an existing building. Hence, it will enhance the value of the asset, that is building. Okay. And this one right here is repairs and maintenance of Atlas 5 vehicle. Okay. And oh, so this vehicle is of 10 lakhs and the expenses are 25,000. Looks like a very expensive vehicle to maintain. Paid this same entry. This is same entry. This is only a practice. 20,000 only. Okay. Now I'll enter furniture or building, whatever the name of the account is. What's the name? Company land and building. Okay, so they are created together. Land and building account. Land and building account. Also, one notable thing is that the depreciation, when you enter a capital expense, it will increase the amount of the asset, hence the depreciation will be charged on the new value, that is value of the asset, value plus capital expense. Okay, capital expense. This is the value amount that will be charged depreciation with. And if you create a value plus revenue expense will charge depreciation only on this one right here. I'll just take a step ahead and write it for you. That is original value plus capital expense plus revenue expense. Okay, plus revenue expense. Okay, so this is now a quick quiz for you. Where do we charge the depreciation? Depreciation will always be charged on capital plus revenue expenses, capital plus original value of the asset. There will be no depreciation on this, no depreciation. Okay, and it will be treated as a normal expense and it will directly go to indirect expense account. Now one thing you can see is this is also going into indirect expense account, but this amount is different and this is also increasing the balance sheet, while this is only going to indirect expense account directly and it is not affecting the balance sheet. Okay, I'll stop spoon feeding you and I'll make this entry, that is go to voucher payment and payment from Citibank, entry as on 1st of April 19. How much is the land and building account? 20,000. Now as soon as you hit this right here, it will increase it with 20,000, which is obvious magic. Let's see that magic now. Enter. Okay, enter. Yeah. Okay. Yeah. So we don't have the check number. Enhanced the value, enhanced storage value of building, and the depreciation amount that will charge depreciation on is 51,05,410 for the year 1920, and for the previous year it will be on 5085 only, that is the old amount. Also, one notable thing is depreciation is never charged on land, because as per the government law land's value never depreciates, hence we should segregate these amounts. from land to building. Enter, accept, yes. Which one is the second entry? This one is revenue expense, payment F5, repairs and maintenance. To which account? That is to cash account. How much? 25,000. Nope, we'll be using bank account. Bank account, repairs and maintenance. Okay, you can make a separate ledger also, ledger that is separate account of at least 5 vehicle maintenance. Yeah, let's do it so that we can track at least 5 vehicle maintenance from outside only. At least 5 maintenance. Looks like a very expensive and very cheesy vehicle. F2 1120. The name is only elegant. Atlas 5 maintenance. Alt C Atlas 5 maintenance. Wow, correct spelling. 25,000. Enter. Vehicle maintenance. Enter till the time it says accept. Okay, you can open profit and loss account. It will only show, yeah, at least 5 vehicle maintenance. Where are you? 25,000. And repairs and maintenance 2,000. Balance sheet, if you open it, fixed asset, land and building will be increased 51, while at least 5 vehicle lock system. Let's compare these balance sheets. F12 show vertical balance sheets, and how to add years. That is okay. Let's go to new column, Alt C, and 1/4/18 to 31/3/19. Methods of stock valuation. Let's see if we can do it. Yeah, this is how you compare the balance sheet. That is on 31/3/20 and that is on 31/3/19. The fixed asset, that is furniture, land and building, 50,85,410, and now it is increased 51,05,410. Okay, you can also open that individual ledger and try it. I'll show you how to do it. DAL, what was the name? Land and building. Alt F2 1/4/19 to 31/3/20. Let's create this year first, and then now you have to go to which one? Related reports. Go to ledger analysis, enter, and click on new column. That is from 1/4/19 to 20. Nope. 1/4/18 to 31/3/19 of land and building. Okay, what's the issue? Related reports, ledger analysis, enter, F2 period 31/4/18 to 31/3/20. Oops, this is not coming. Let me tell you a different way. So yeah, I can't seem to remember how to compare this year wise, but let's compare columnar. Was it? Okay, columnar. Okay, we'll do it in some next lecture. Let's not waste time. And yeah, we have to do something from here only. I can't seem to remember. So yeah, see you in the next lecture, but you got what I wanted to tell you. Hence, in the next lecture, we'll learn how can we manipulate capital and revenue expenditure to inflate and deflate our profit and balance sheets. Good day.